Hello, everybody, and welcome to the Crypto Hipster Podcast. This is your host, Jamil Hassan, the Crypto Hipster, where I interview founders, entrepreneurs, executives, thought leaders, artists, you name it, all over the world of crypto and blockchain globally. And I have another amazing guest. All my guests are amazing. I'm looking forward to this interview. I have the head of digital assets at io.finnet, Michael Cunningham. Welcome, Michael, to the show today.
Hey, thanks so much for having me. It's a pleasure to be here.
You're very welcome. Thanks for joining me. And I'll kick things off with the first question I ask everybody is, what is your background, and is it a logical background for what you're doing now?
I would certainly hope so. So initially, my background is actually in materials science and engineering and a focus in nanotechnology. And somehow I've found myself in the world of crypto and digital assets. So it's been a fun journey through that. Started out of school and went into engineering for actually NASA's Goddard Space Flight Center, worked as a contractor there, and then reconnected with a colleague of mine who was actually spinning out a company from a private bank in Nassau in the Bahamas, and was looking for some help doing that. And I was familiar with Bitcoin enough to know that I wanted to get involved in that industry. It was around 2017 at the time. Things were, taking off. So I kind of went back and forth with him a few times, and this was it went into 2018 as everything was then at that point tanking a good 50% in the market. But I was still pretty interested. So ended up going down there, joining as the second employee. I was surprised to find myself actually working out of the bank and wearing a suit and tie to work every day. It was not really what I had in mind when I, left to join a startup. But it was a very fun experience, and I ended up getting tasked with the project of setting up their custody solution. And we went on to build out a custody solution from $0 to over 9 figures in AUM in under 6 months. And from there, there was a tremendous learning experience, obviously, as we went, and really got exposed to all sorts of things, including the client base of a private bank, and learning the ins and outs of digital assets, blockchains, security considerations around all of that. And fast forward a couple of years, actually the deputy CEO of the bank was leaving to start this technology company, io.finnet, and asked me to come along as part of that founding team. So then in 2021, we raised some money when the markets were quite green, quite good. Everyone was all the VC funds were very happy to hand their money out in every which direction to get some more exposure to the space, and because everything was going up and to the right. And since that point, we've now grown from a team of 6 to over 50 employees, built out a product portfolio of 3 different products, and have just launched this self-custody solution we call IO Vault, based around MPC technology, multi-party computation. I'll be happy to get into all of that fun stuff. But yeah, it's been quite a journey along the way. So good
Awesome.
fun.
I do want to get into the vault. I first want to find out what io.finnet is all about, including your mission and vision, and then we can get into the vault.
Yeah, absolutely. So in general, the positioning that we kind of found ourselves in is all based on real world experience and looking at the problems that the blockchain and digital assets are really meant to solve in the first place. Beyond being a store of value, such as Bitcoin has evolved into, but really looking at the efficiency improvements and transparency and operational capabilities of a blockchain system, that can be deployed globally and utilized to actually facilitate payments anywhere in the world, 24/7, 365. But there's a lot of challenges, before we get to that ideal world out there. And the reality is today, we still utilize primarily a system that was developed and deployed in the 1970s. So this stuff is archaic. I'm speaking about the Swift system. So essentially, we've developed this product of portfolios just sitting in between, the most advanced technologies in the world and some of the oldest, but most well used. So we have three technologies out there today. Three platforms, so to speak. We have a real-world asset tokenization platform, which we call IO Network. We have a fiat payments solution, which enables on and off ramping of payments across various jurisdictions globally, called IO Flow. And then we have our self-custody solution called IO Vault. Now, what's the point of this? What does it all do? It's in order to provide, companies and institutions that seamless interoperability between traditional finance as it stands today and those old traditional payment rails, and where we're building towards in the future, and where what we have today in terms of new technologies, which is these public and also private blockchain systems between institutions and between individuals that can support these payments. So that's pretty much this problem space that we're operating in and providing solutions for.
Got it. So out of the three, Vault is new. You just launched it, right? What's the Vault? I'm particularly interested in how the Vault works, and what you're enabling with the new edition in addition to what you had before.
Yeah. So IO Vault, like all of our products, is B2B facing. So we're selling to other businesses out there. But regardless of what kind of business you are, you can be a bank or you can be a little e-commerce startup. If you want to interact with digital assets, you need a secure infrastructure, secure platform in order to do so that your financial assets, your Bitcoin, your stable coins are there, and you can securely and confidently send and receive them, and also do so in a way that you can scale with the success of your business. So that's the solution that we provide. And we do so in a self-custody way so that you can accomplish all of this without having to trust a third-party intermediary, without having to leave your tokens on an exchange, for example, like FTX, or having to trust a bank to do it for you, right? And at the same time, enabling this to happen in a simple and secure way. Today, if you were to go about this without a product like ours, you as a business would have a single private key that controls all of your financial assets, that are all of your financial digital assets for your business. Now, who do you entrust in your business with that key? Is it your CFO? Is it yourself? And then what happens if the employee you trust with this key doesn't show up to work the next day? Or what happens to the business if you are unable to, you disappear overnight, right? This is the problem we're tackling with our unique technology, the multi-party computation aspect. It's an advanced cryptographic technology that actually enables you to generate these signatures that are required to move the assets on the blockchain itself without a single point of failure, without that single private key. So you can have a multi-signature approach to this stuff, where you actually have multiple employees in your business that all have to come together and reach a particular quorum or threshold in order to actually move assets and facilitate these transactions. So in that sense, you have a much more distributed security model, and you don't have key man risk or a single point of failure where your whole business comes to a grinding halt. And it's that kind of risk that has really made things, made adoption really difficult in the space. So hopefully with solutions like ours and others out there, we can really, overcome this barrier to entry, if you will, and improve and increase adoption in a much broader scale.
You're B2B. Your ideal clients are large corporates. What it sounds like that, or what are they?
Yeah, so we really have quite a broad range for companies that interact directly with digital assets. So just of our first few clients, given that we've launched at this point around 8 weeks ago, we already have a few significant clients. One of which is one of the largest exchanges in Africa. Another one is one of the largest market making arbitrage funds globally, participating in both DeFi and centralized exchange markets. And another is a licensed EMI, a licensed payment provider out of Singapore as well. So it can really span lots of different applications. And one last I did not mention is also a company that has launched a DEX as well. So it's a DeFi project that's utilizing this on top. So there's a lot of different potential client characteristics or demographics because this is such a fundamental need if you have a company that needs to go and interact with these types of assets. You want to do so in the most secure way possible. And why take counterparty risk? Why why trust someone else when the entire ethos of the industry is to only have to trust yourself, ideally, right? And the employees in your company. And we've seen the downside of the opposite.
Oh yeah, I definitely unbanked myself a couple of years ago.
Yeah, haven't we all, unfortunately?
Yeah. So, okay, great.
Anyway.
Financial networks. I want to talk about financial networks. What are the current challenges of them, financial networks, and how are you reshaping the global landscape?
Sure. Well, this relates back to what I was speaking about previously. I would say, in the sense that we're seriously out here in the 21st century, utilizing 50 plus, 60 plus year old technology, to facilitate the most valuable of our transactions, right? And relying upon that. And we're accepting the fact that it takes days to complete at times and can be reversed, days and up to months later, depending on the payment networks that are being utilized. ACH in the United States, for example, can be up to 90 days and you can still have your payment reversed if the other party disputes it. This makes, this is a massive headache for all sorts of companies, merchants alike, and sellers on eBay, etc. Very challenging. Whereas, on the other side of things, we have these advanced technologies providing these, modern capabilities, if you will. If you, live on the internet, you're used to having everything at your fingertips in an instant. That's not the case in a bank, and it's not the case in the traditional financial world. Everything comes grinding to a halt unnaturally at 6 p.m. on a Friday for 48 hours. Doesn't quite make too much sense in a globalized world where you have different markets open at different times. For digital assets, that's not the case, right? We have 24/7 ecosystem. And it's really exciting. It's terribly stressful at times. But what it does is it provides a marketplace, no matter where you are in the world, no matter what time it is, that you can go and access. And by leveraging this, you can also facilitate payments on a 24/7, 365 basis, no matter what holiday it is in whatever country that you need to make a payment. And this doesn't sound all that terribly exciting, but that's why we're here, because it doesn't exist yet in the sense of the adoption just isn't there. And so what sounds intuitive isn't available, and it's just a matter of time, frankly. And that's why we're building a solution for the need that exists, right? So the challenging part, of course, is reconciling between these two very distinct systems. And we've seen time and time again where this becomes a challenge, especially when you have political pressure, which in turn results in regulatory pressure and in completely varying capacities globally. It's not going to happen overnight. And it's not going to be a smooth transition necessarily, even if there's an obvious answer and an obvious solution to adopt these more advanced and more capable payment rails, because you have to literally coordinate the entire planet. So there's a lot of opportunity along the way to provide a lot of value by making things easier and smoother. Right?
I agree.
Yeah, there's some inherent challenges and issues with these as well, like we've touched on already, but also in a world today where you can start up a business in an afternoon, the dependence upon these, massive third parties, custodians and traditional financial participants is very frustrating for many as well, right? So having an open system that anyone can go and participate with in a fairly fair and transparent way, and also a safe and appropriate KYC regulated way, so that there's nothing nefarious ongoing. Both of these are actually capable at the same time. You can, in fact, support privacy while ensuring that you are compliant and nothing nothing nefarious is occurring. So this is kind of the interesting aspect of what we have to look forward to as we build towards this, on all fronts, not just from our company, but with the industry as a whole. So I'm looking forward to seeing that. And in the meantime, it's a race of adoption to see which one comes out. What new network will be the network that gets adopted and used, or will we have a mix of many?
I'm leaning toward a mix of many. That's just my thoughts.
Yeah.
Although if you talk to a Bitcoin maximalist, they would argue with that. We'll have to see, right? So
I mean, I would err on the side of a mix of many myself as well, and I would also consider myself almost a Bitcoin maximalist. But at the same time, if you take that assumption, then interoperability becomes increasingly important, and that's also an interesting aspect of where our specific technology can come into play, because you can use it across any of these networks as desired, because it operates at an even lower level. It doesn't rely on the network and the chain itself. It's just a matter of providing that infrastructure for managing the security of your digital assets and of that private key infrastructure.
Interesting. So let's go along the lines of the interoperability, and talk about multi-party computations that you brought up earlier, right? Some of the drawbacks, I want to find out what some of the drawbacks have been to date, what you're doing to improve it and get rid of those drawbacks.
Yeah, for sure. So to date, there have been some popular solutions out there based on MPC. We're certainly not the first to come to market with an MPC-based solution, but we are the first to bring a much more trustless architecture to it. So in the past, you have companies that utilize MPC, but because of hardware limitations, because they started much earlier building out these systems, and because the research advances so well, and so fast, especially in this space, as we all know, we've actually been able to adopt a much more flexible implementation ourselves. But to speak to the previously existing drawbacks in other systems, many platforms or technology providers or custodians, they may utilize MPC internally but because of hardware limitations, they need to deploy big beefy servers someplace, and then you can utilize MPC to enable signatures generation between two or three different servers that each hold one of these secret shares themselves. Now that's great because you don't have, like back in the day, you don't have a single private key that if a hacker gets into that server and extracts it, now he can sign a transaction and move all of your company's assets out to his, uh, wallet in North Korea or whatnot, however you like to frame it. But it's still not a perfect solution because as a client, as a user of these solutions, you essentially still need to log into this platform and interact with their product, their services, and you're doing so at the software level, right? So you might have set up whitelisting for your addresses or transactional policies that say you can't withdraw, over XYZ amount. But the problem is that those policies then themselves are enforced at the software level, and that software is hosted by this technology provider. And if their server does get compromised, the attacker doesn't need to go to all three different servers and compromise them all at the same time in order to extract a private key. All they need to do is get a transaction signed that shouldn't be signed. So if they can manipulate those software policies, then the actual security of the MPC cryptography itself becomes irrelevant. So you're making a funny face over here, but please let me know if I can if I'm going at too low level, then I'll try and break it down.
No, you're good. Love the way you alluded to North Korea.
Yeah, I'm not going to be opening emails for a while, but we'll see. But yeah, so that's kind of that's been the historic challenge with MPC, because it is a much more burdensome approach to this cryptographic signing process from a resources standpoint, from a computing resources standpoint. But just over the span of a few years, as consumer hardware improves drastically, now we're at a point where you can do this kind of thing on your device, on your iOS device, for instance. And at the same time, the actual cryptography, the research there has advanced. So you have more flexible implementations. So to kind of bring this full circle, we at io.finnet, for the IO Vault product, we have a more flexible implementation, and which actually allows an M out of N configuration. So that is just to say, rather than having to be confined to 2 or 3 servers, and maybe your company hosts one of those servers, and then you have to trust an API endpoint that you utilize to interact with software-based transactional policies, you can in fact leverage with our infrastructure. You can actually distribute these shares directly to your employees and their physical devices. And so then you're actually signing, at the cryptographic level, each employee is using their own device to biometrically authenticate and approve and participate in signing for each of these transactions. And they're also contributing to that physical security and distribution of these multiple keys, if you would. They're not keys, they're secret shares, but we'll, don't worry about it for the time being. So with that, you're not constrained to, the security model is actually extended down to the individual end user devices themselves. And we can leverage the fact that, with the much more flexible implementation, you can have 3 employees, you can have 30 employees, and they can all have one share or even more than one share. They can all have one device or more than one device. And with that, you can accommodate pretty much any kind of governance or internal policies and procedures as needed to have literally the most, advanced and secure custody solution out there. So that's kind of the exciting part from from my standpoint. Exciting to some, not to all, certainly, but um,
It sounds good. I'm just thinking about like how it would work in a big no, like multinational, like where I was at AIG, but it would work there too. You
yeah,
know,
and where it gets really interesting is, we haven't constricted ourselves. Yeah, the interesting thing is our architecture isn't limited to simply, end user devices as well. So we can still run and allocate shares to a server. So we do have a component of our solution actually allows a user to flexibly allocate one or more of these shares to a server that they actually run themselves. Still has a hardware-based security model because we use a trusted execution environment, but that's just a fancy way to say even if you have physical access to the machine, you can't access any of that sensitive cryptographic material. But using this, you can actually deploy custom business logic and start to fully automate the end-to-end processes within constraints that you set and establish and control yourself. And we've taken that one step further because of this, because of our view. While we do support a simple API callback to a system somewhere that's just enforced at the software level, we also support the ability to actually point this virtual signer to a smart contract that you can deploy on any blockchain. We support EVM based blockchains for this, but it could be a private chain, it could be a public chain, and you can actually deploy your approval logic in a smart contract. And once that's on the blockchain, then of course the logic there is benefiting from the security of the blockchain as a whole. So it's pretty much impossible for an attacker to go out there and change the established logic that's deployed in a smart contract. And if they could, they would probably go after one of these open protocol platforms in DeFi that hold billions and billions of dollars today. So that's kind of our unique security model that we're going after. And with that, in combination with the individual devices and the flexibility around how you set everything up, this is how we would be able to provide a solution to both massive institutions and small startups.
it's because your security is at the server, blockchain, and app level.
Exactly. And physically enforced. So we extend that extend that model to the hardware level across all of those components, right? And the smart contract that you deploy, you can control that with your physical devices as well. So if you do want to change that logic, you can still go back and change it. There are kind of different structures for smart contracts out there that allow you to upgrade it, but do it in a secure way, add additional policies, etc. So that's what I'm working on right now, which has been good fun.
Pretty smart. That's really smart. I don't foresee any hacks coming. So, um,
No,
you know,
better not.
yeah. So I want to find out. You offer, what you call that security is third generation. Like, what's a brief walkthrough of like first, second, and now third
Yeah,
generation?
absolutely. So, I mean, just to go back in time a little bit, to begin with, we didn't even have the concept of, HD addresses or encrypted keys. You'd have your unencrypted private key in your software wallet on your PC as you were mining and deposit into your wallet. But moving forward in time, as businesses actually bloomed up around this ecosystem, and they didn't want to take they wanted to mitigate this risk. There are kind of two ways to go about it. And we've seen the downsides of all of them. But essentially that first generation kind of centered around two different solutions. You had the concept of hot and cold wallets, where a hot wallet might be where an exchange like Mt. Gox would have a private key hosted hosted, unencrypted because they had to actively be using it to sign these transactions in an automated way for their exchange, hosted on a server that was not secure in hindsight. But obviously there's very clear drawbacks to that. And so that's kind of where the hot versus cold concept came from. On the cold side, you had completely offline key. It could even be written down on a piece of paper. And this signing, you'd go into a vault, and on a computer that's never been connected to the internet, cryptographically sign this piece of data, and then bring that back out and broadcast it to the network and move your assets. And obviously, on the one hand, exchanges really ended up having to settle on the hot wallet approach in order to provide a scalable business, and individuals or custodians settled on the cold wallet support. And this is about where regulators are now today, even with their regulations, unfortunately, because we've evolved since this point. But these were kind of the two options at hand. And we saw downsides with both of these. There are tons of stories on both sides where exchanges get hacked. Someone gets access to the server. It can be a DevOps guy, it can be an external actor. They get a single private key. They don't even have to sign a transaction then. They can wait 6 months and then sign with the same private key 6 months later, move all the assets off the exchange, kind of rug pull the exchange, if you will. Whereas on the other hand, you have cold storage solutions. Individuals set these up themselves, and then from one day to the next, for some reason or another, you lost that little piece of paper where you put your password on it, and now you can't access your funds and your assets. And it's disastrous. So that's kind of the challenge of that kind of first iteration. Where we've gone as an industry from that time is we kind of moved forward to solutions that kind of allow you to diversify your custody, have some redundancy. So we have on-chain, multi-sig for Bitcoin, of course, but for others we have smart contract based wallets as well, that you can have multiple signers and approvers. The challenge with that, of course, is then you have different solutions for different assets and different networks, and that's very operationally intensive. You can screw up, and that's rough. And so then along came MPC as an alternative, still in this kind of second phase, but done so as we were speaking to previously on servers provided by a technology provider that still holds some of these shares themselves. So they're still taking some risk, and there's still some risk there, certainly, if their system gets compromised and those software-based policies get compromised. But the benefit is you get sort of the best of both worlds. You get accessibility to your assets, scalability because you have an API that you can build a product around, and security of eliminating that single source of failure, so to speak. But you still kind of have that exposure to that provider, that custodian, that's providing these, in the sense that if their systems get compromised, you are still at risk, right? And then we kind of get to the solution that we're bringing to market today, or in the past few months here, and that where our whole architecture is built in a way such that we eliminate that risk while still maintaining that scalability, still maintaining the hardware-based security itself, and benefit from the elimination of that single point of failure. And you can even have a setup that is cold, so to speak, by hosting some of these shares completely offline on devices that don't come online, utilizing leveraging like HSMs, which are hardware security modules, similar to like a Ledger Nano, even a Ledger Nano device, if you're familiar. It's a consumer piece, but we use those at the bank. Even we had a for my time in the Bahamas, it was a company called Delchain. But for that custody solution, I was I was not as well versed in the technology in the space, but I knew for sure that if something was online, there was a possibility that it could get hacked. So what we ended up doing is doing a completely cold storage solution. Even involved me flying to multiple different continents to put our engraved plates with the backup phrases in different places. So it was pretty crazy, but yeah, that's obviously not a scalable solution for a business that wants to grow, wants to onboard many clients from that point, right? So there's always got to be something else, or you have a flexible enough solution that it can do both. So
Yeah, sounds good. I have a this work for me. Um, I send my crypto that's not in like on exchange. I send it to a blockchain address. I have the keys written down. If that blockchain address has no ether in it, so in order for somebody to steal my tokens, they're going to have to make a deposit. And criminals never make a deposit because they can be traced and tracked really easily. So, you
yeah,
know, that's been my solution. I'm like some of the first generation still. So
that reminds me of a great scam I saw on Twitter, actually, where someone pretended to accidentally post their 24 words for their corresponding to their key, and they had pre-funded this account in the same way. But then they set up a bot. So when people did go and try and deposit ETH to move the stable coins, the ERC20 tokens that were sitting there, the bot would just sweep the Ethereum out. it
I'm
was
not
a it was a impressively clever little honeypot attack there.
I'm not that smart to think about that, but that's a good idea. No, I won't do it though. So,
Yeah,
yeah, I enjoyed speaking with you. I thank you very much for the conversation today. And it's great learning what you guys are up to. I have one last question.
sure thing.
Um, how can people find out more information about you, about io FinTech, about any of your products, services? How can they do that?
Absolutely. You can go to www.iofinnet.com, or you can reach out to me on LinkedIn or Twitter. Twitter's at market what with 3 A's. So feel free to follow along. I think I have under 1,000 followers, and most of them are bots. So I'm out there tweeting to myself most of the time.
Awesome. Awesome. Thank you very much for your time today.
Thanks so much. It's been a pleasure, Demille. Yeah, have a great one.